Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. So, with me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. To read more about it, please see the description below. The bullish bets for West Texas Intermediate crude oil have jumped by most in 3 months, with traders optimistic that Saudi Arabia production cuts have put a higher floor under oil prices. Even if production cuts from Saudi Arabia don't move oil prices in the near term, analysts see market tightening this quarter. That said, oil prices have rallied close to 15% over the last few weeks, from lows of around $66.20 per barrel in early June to more than $75 per barrel today. With Saudi Arabia doing everything it can to keep floor under oil prices, traders have become more bullish. And that's great news for companies like Pioneer Natural Resources Co., traded on New York Stock Exchange under symbol PXD. John?
Yeah, thanks, Mo. Correct. Pioneer Natural Resources Co. is an independent oil and gas exploration and production company with the largest contiguous acreage position in the Permian Basin of West Texas. It's here that the company explores for, develops, and produces oil, natural gas, liquids, and gas. The Permian Basin is actually one of the most well-known hydrocarbon-producing areas. Since the first well was drilled in 1920, over 30 billion barrels of crude oil have been recovered. How much is left? Experts believe there are at least 20 billion barrels remaining, though there are others that maintain that the untapped resources rival the supply of the Ghawar field, the world's largest oil field in Saudi Arabia, which I believe has over 48 billion barrels of oil still.
John, what's happening with production here? I see that they came in with near the high end of their guidance for Q1 production.
Yeah, the first quarter was pretty solid for Pioneer. They reported first quarter net income of $1.2 billion, or $5 per diluted share, excluding one-time unusual items. Adjusted earnings for the first quarter was $1.3 billion, or $5.21 per share. Cash flow from operations was $2.3 billion. And this resulted in cash flow of $948 million. At the end of the quarter, Pioneer still maintains a strong balance sheet with unrestricted cash on hand of $1.2 billion and net debt of only $4.7 billion. And you're right, production was near the high end of guidance. For the first quarter, total production averaged 361,000 barrels of oil per day, near the top end of guidance. And first quarter total production averaged 680,000 barrels per day, also near the top end of guidance.
And I'm assuming the strong cash flow has made the dividend payout better here.
Absolutely. Pioneer, for starters, it actually pays a base dividend of $1.25 per quarter, or $5 on an annual basis. And that base dividend payment is up 14% over the $1.10 per share it paid out in 2022. It's actually increased its base dividend payout for the last 6 years. But in addition to the base dividend, and this is the good part, it also tacks on a variable dividend each month, or each quarter, sorry. The variable dividend can really juice the quarterly payouts. For example, in the first quarter of 2022, it paid out $3.78 per share. So that's $1.10 per base and $2.68 variable. And jump forward to the third quarter of 2022, it paid out $8.57 per share. Then that included a $7.47 variable distribution. In 2022, its total payout was $25.44. And to break that down, that's a base payout of $4.40 and a variable dividend of $21.05. So fast forward to 2023, in the first quarter, it paid out $5.58 per dividend. And in the second quarter, the distribution was $3.34, or $23.20 on an annual basis, for a pretty big massive yield of 11.10 cents. That's more than triple the current inflation rate of 2.97%.
I know there's one phenomenon over the past few years that's been going around, and it's that companies are buying back their shares. You hear about it in the technology sector than anywhere else, but I see that this company is actually buying its own shares. What's happening?
Yeah, it's like it has a pretty massive share repurchase program. In addition to a strong dividend payout, the company continues to make opportunistic share repurchases. Now, I'm sure income hogs would rather the company give them the money in the form of even higher distribution, but management has opted to return value through share repurchases as well. During the first quarter, the company actually repurchased 500 million of common stock at an average price of $206. And then recently the board authorized a new $4 billion common share repurchase program. Now, in conjunction with the base dividend increase and new share repurchase program, The company's actually refined its capital return structure, starting with upcoming second quarter cash flow, which we should be, getting the results in the coming weeks. Under the modified framework, Pioneer expects to return at least 75% of quarterly free cash flow to shareholders through a combination of base plus variable dividends and share repurchases. The remaining 25% will be directed towards the balance sheet.
And what's the consensus here among Wall Street analysts? Are they bullish, bearish? What's happening here?
Bullish. We'll go with bullish for right now. Oil and gas stocks were the biggest winners in 2021 and 2022, but it's been a different story in 2023. Despite oil production cuts from Saudi Arabia, investors are still focused on rising interest rates and a potential recession. And this has, in part, kept a lid on oil prices, but the outlook more broadly and further out remains pretty robust. If you look at the company's chart, you'll see that Pioneer stock has done exceptionally well since cratering during the pandemic. Between March 2020, when Pioneer shares bottoms, and May 2022, when it hit a new record high, the Pioneer stocks registered a pretty big gain of 562%. Now, Pioneer stock has retraced a little bit since then and is, for the most part, trading in a tight range at around 210 per share. It's down right now 3.6% year to date, but it's up 8.8% over the last 12 months. Now, the outlook for Pioneer stock remains bullish, with Wall Street analysts providing a 12-month share price target of $243.50 to 315 cents per share.
All right, John, thank you so much for talking about Pioneer Natural Resources Co. It is a great oil and gas stock with growing dividends and a new $4 billion share repurchase program. It reported outstanding first quarter results, which includes $950 million of free cash flow and production near high end of the guidance. It also provided solid guidance going forward. The company outlook remains solid, and it's great for income investors. In the upcoming second quarter, the company has refined its capital structure, which includes returning at least 75% of quarterly free cash flow to shareholders through a combination of base plus variable dividends and share repurchases. That's it for today. We'll be back with another income idea soon. Stay tuned. In the meantime, don't forget to like this video, subscribe to our channel. Goodbye for now.